Okay, Noor is a sole trader and her bookkeeper is in the process of completing the books of account and preparing the financial statement for the year ended 30th April 2016. Very important to bear in mind what is the year ended. Okay, there are 3 accounts that need to be completed. Provision for doubtful debt is a credit account. Provision for depreciation is a credit account. Interest, receivables, income. So all of these are credit account. Bookkeeper provides the following information relating to these accounts. 1st of May, 30th of April 2016 is the year end. The 1st of May is opening year start. Information's given. Provision for doubtful debt, provision for depre and receivables in arrear. Okay, so if it said arrear, we need to recap our Papa Allah knowledge. A-L-L-A. Okay, this bit is opening, this bit is closing. Okay, so what it says, arrears means due, and is opening due, accrued, you less. It's a credit account, it should go on the debit side if we meant to do a T account. Okay, what else? Balance, 30th April 2016, given with trade receivables, non-current asset, and interest due. Good. Papa Allah again, it's a closing. And arrear, you add. So in a T account, we will add it. And during the year ended 30th April 2016, interest received, okay, straight into the credit of the interest received account. There were no purchases of non-current asset or sale. Very good. Life is easy if you're not purchasing or selling any non-current asset. Provision for doubtful debt, 2.5% on your trade receivables. Let's work it out here. Your trade receivables is 45,000. So times by 2.5%. We're doing our workings. Yeah. And it is 1125. This is your closing. You're given with opening, closing. There is a decrease in doubtful debt by 455. Decrease in DD. It goes on the debit side of your T account. How do you know? Its decrease is 1580 minus 1125. 455. Okay, quite a few workings we have done already. That's good. You've been given depreciation, reducing balance 30%. So if it is reducing balance, you need to do cost of the asset minus provision for depreciation, which is 21,000. Let me take my calculator. It's 61,500. Then on that figure you do 30%, and what my calculator says is 18,450 should be gone into the income statement. We have done all of our kind of workings. Let's do the requirements. Okay, prepare the following accounts, T accounts, for the year ended 30th April 2016. Clearly show the transfer to income statement. Okay, provision for doubtful debt. It's a credit account. We've given opening provision 2015 was the opening May. Let's go over here. Yeah, 1st of May. 1st of May, and provision for doubtful debt 1580. So balance BD. 1st May, balance BD 1580, and if you remember, we have worked out 30th April 2016 our balance CD W1, yeah, it's 1125. As soon as you get CD, that becomes your BD on the other side. Bell BD 1st May 2016 1125. There's no more information regarding receivables, payables, doubtful debt, but yes, we have worked out there is a decrease of doubtful debt. Yeah, here is the decrease. How did you find it? Over here, 1580 minus 1125. Also, we can calculate it in our T account. Check which side is bigger. Clearly, your credit side is bigger. You write 1580 on the other side as well. Take away these 1125. You're left with 455. That should go your income statement, 30th April 2016. There we go. Our marks are in the pocket. There are 11 marks for these 3 items, so approximately some 3 to 4 marks. Okay, number 1 done. We don't need these workings. We have done our workings. Provision for depreciation, another credit account. We have given it the balance, and the balance BD you write on the credit side. Balance BD, 1st of May 2015. What is the balance? Different shed provision for depre, 21,000. Let's write it down. $21,000. Okay, now we need to work out an income statement, and we have worked it out. 30th of April. The working is 18,450 is depreciation charge for the year. That goes on the credit side of your account. Okay, the figure is 18,450. There is no much given. You add up these two, you get 39,450 right on the other side. All of it becomes your balance CD. That becomes your BD. 39,450. Okay, and yeah, you put the date. This is the last date, 30th of April, 1st of May, and this is 15 starting. This is 16, 2016. These dates are also important. And the interest receivables, credit account. And if you remember your Papa Ala, we have done the top. Yes, I'll take another highlighter to highlight it. Interest in arrear, and you get 90. This 90 advance. No, arrear is due, and this is opening due. So if it's opening due, your Papa Allah says it should be less, and less means on the debit side. Okay, so let's write it on the debit side of our account as balance BD. It's quite a big question, only for 21 marks. Okay, balance BD, £90. 2015 1st May, write the date, and we had a balance CD arrear as well, should be added. Balance CD, and that's 2016 30th April. As soon as you get balance CD on the other side, it becomes balance BD, 1st of May 2016. But what is the figure? Let's double confirm the figure from a closing information, and the figure is interest receivable in arrear. This is your closing balances, £100. Okay, we will take it £100. Yes, both sides. Nope. Okay, they said that we have received some money. Bank, also 30th April. How much money? Double checking. We received interest in total 1190. Scroll down bottom. Yep, 1190. No more information. So 1190, 100, and you get 1290 on the other side, 1290, take away 90, remaining balance is 1200. That should be your income statement. Okay, what else? We have done our 3 T accounts. Now scroll down bottom. Okay, some multiple choice questions. Nowadays in exams, this type of questions are quite common. So be ready for this. 1 mark, but quite a bit of working you need to do. It says, tick one box to show which of the following amounts would be included in the income statement for rent receivables. Okay, might have to do a T account just right above my camera. All right, so what information given? Little bit of Papa Ala knowledge you need here again. PAPA, very interesting. Papa Ala and very helpful. This bit is opening, this bit here is closing. Okay, so anything from 2015 is opening, advance. So opening, prepaid, this prepaid advance is added. It's a credit account, rent income. So you want to add Bell BD to 600. Okay, you received some money, 28400. It's on the credit side as bank or cash. And rent received in advance during the year ended. So prepaid closing is less. If it is less, the debit side as balance CD. As soon as you get balance CD, it's BD, but it's not information. It just need, well, you need 1 mark. You get the right answer. 2400. Clearly, credit side is bigger. The added up figure is 31,000. Yes. At the other side, 31,000. Take away 2400. Your income statement is 28,400. Answer is 28,400. Moving to the next bit. 1 mark, but it's on inventory. Okay, they asked tick the box to show which of the following amounts, the damaged items, would be included in the closing inventory. Some of the items are damaged. What is the correct answer? That should be included in the inventory. If you remember the approach, you will be given a cost and you need to calculate net realizable value. Okay, now the closing inventory was valued. That's the whole figure of the closing inventory, but of this, included in this figure, some items been damaged. Selling price of the items are 4250. That's very often not needed. We'll see in this case where needed or not. The cost price is 2150. We need it, 2150. In order to sell these items, they need to be repaired at 800. Then we can sell it for to 600. Yes, we don't need 4250. To calculate net realizable value, we do selling price is to 600. We can sell it for to 600, but to make it sellable, we need to do repair cost of 800, and you get the answer 1800. And that's the answer being asking you here. That's the closing inventory value should be included because that's lower and this cost is higher. Prudence concept says take the lower of cost or net realizable value. But you see, because of that, there is a information like there's a loss of 350. So if you just further, maybe needed, maybe not, of this inventory here, we will be taking away 350. 38,400 should go to your balance sheet and income statement as closing inventory. Maybe we need, maybe we don't. Let's go further. Okay, sundry expenses total given included in this way. Noor's health club subscription. That's something personal. So that's, yeah, personal drawings. You can't include your personal expense into the business. Business is separate. from the owner. Mobile phone bills totaling 420. Half of it is for personal use. You divide it by 2, you get 210. Yeah, you do. Okay. Okay, what is being asked? Okay, box, which of the following amounts for sundry expenses should be included in the income statement? Yeah, you need to deduct these items. The 588 you deduct, you can't take it, and 210 you deduct. What you get is 2094. That's the answer. Moving on, number E. What concept is this? Absolutely business entity concept. There is no doubt of this, of making it business entity concept. Business, it's separate from the owner. And the last one, 30th April, the bank balances is overdrawn. Okay, why they gave us? Let's see, maybe needed or maybe not sometimes. Prepare the current assets. The balance sheet extract, you should use all relevant information from A to D. Okay, so far in our A to D we had trade receivables. That's current asset. Then we've seen that income due, which is interest due. Any income due is a good thing. Current asset will get these incomes. And we had a close inventory. Okay, let's start your trade receivables. Let's go back to the question. Where is the trade receivables figure? Quite up somewhere. Where about? Fact. Yeah. Here's some doubtful debt information you can see. And there you go, our closing inventory, 45,000. But we had some doubtful debt, 1125 needs to be taken away, and that should be our closing inventory figure. For a couple of marks, scroll down, 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 all the way down. 45,000 minus 1125, you get 43,875. Interest due, I believe it's £100. Just double checking. Interest, we can check from our T account as well. Yeah, there we go. That's our T account. 100 due. It's given whereabout in the question. I'll show you this. Look at the color of like highlighter, and in the exam you don't need to do a lot of like this, but just here the workings I put here, but they give you working spaces just like this here, and more working spaces. Do your workings here neat and clean. Okay, scroll down, bottom. There we go. 100. So 100 we have written, and closing inventory we have done bit of working here. Let me show you. This is just like we have done. Just write little while. Here we go. That's the one. 38,400. You take it straight down there. 38,400. You add 1, 2, 3. 82,375 is the answer, and that's how you get 21 out of 20. Happy you, happy us. You get A in AS, A2, A star. All the best.